Hi, I'm Jeff Hirsch. I'm here at Traders Expo Chicago with my good friend Adrian Manz, and he is the co-founder with his illustrious wife of TraderInsight.com. And you're seeing some low volatility, as we often see this time of year. You've got some different trading techniques, different trading styles. What do you do in this low volatility environment?
So we shifted the focus from pretty much every summer, right? Every time volatility takes a dip or around holidays, we shift the focus from trades that sort of roll out over the course of the trading day to things that happen in the first 30 to 60 minutes of the day. So right now,
you find the action early on.
Right, you're looking for, so we'll look at sort of the pre-market moves in stocks like Apple, a bunch of super caps, right? Apple, Tesla, Baba, Netflix, Nvidia. So we'll take those, yeah, we take them and we put them up there and we try to see, all right, what's the opening spread going to look like? Is it giant, like on Tesla or something like that? It's usually out of the range of what's going to be a comfortable trade. Apple, almost every day, winds up trading in the half hour before the market opens, the way most stocks trade right after the market opens, right? So we get some real good...
Sort of a microcosm of a trading day.
Right, and we try to sort of bracket up where the volatility was during the pre-market, compare it to volatility in previous days. So we developed this like volatility band strategy on the chart where we're looking at, okay, here's where we constrained volatility yesterday, the day before that. Look at where the pre-market is, and then are we going to trade up and into one of those ranges or down and into one of those ranges? That determines our opening trade. And then as the day goes on, we're just looking at inflections at those volatility bands. By the time the hour is over with, so when the market opens, Apple tends to lead.
The day goes on. By the time the morning, the first hour goes by.
Right, so Apple leads the market early. And by the time you're an hour in, it's just mirroring the S&P. It flattens out and you're done. Right.
So give us an example or two of some of the implementations of this trade right around, I mean, the market's still been pretty active here in the beginning of July, but it's starting to quiet down right now.
So for the last couple days, the tell with this whole thing has been that it's trading in prior sessions volatility bands, right? So it's very much just range-bound Apple. And we pair that strategy then with, since we're in earnings season, we pair it with an opening gap strategy that goes through and handicaps gaps as to, again, by volatility. Is it 2 standard deviations above or below its typical volatility, when you add it to the mean volatility? And if it is, we look to fade it back into the range. We're statisticians, right? So we're looking at, a 95% confidence interval.
So if it's above that range near the open, you're going to fade it. You're going to fade that back into it, and
back toward the open. Yeah, back towards the open a trade. So first bar comes in, 2 SD out. Second bar comes in, starts moving higher. Now we're looking at, can we fade it back into the opening tick, right? Market makers are participating in the opening tick. That's where they've got their orders sitting. We're just looking for the small fade, not a gap close.
And it's a quick trade.
Quick trade, 50, 60 cents, sometimes $1, but not much more than that.
Minutes?
We're usually in and out in the first 10 or 15 minutes of the session.
Very cool. Thanks very much, Adrian.
All right.
Thanks, everyone, for joining us.